mentioned something about credit, and I know credit is sort of the lifeblood as far as it keeps economies going. I mean, you have to have credit to be able to move. That allows businesses to operate. I mean, as a society, everything is kind of based around credit. That's how people purchase things. That's how things get built. Do you see credit tightening up more? You mentioned that a little bit. We saw it on lending. We're certainly seeing on certain parts of the segment of our industry where some companies are getting much tighter. How do you see that affecting us now and going forward? Do you see that getting tighter, or do you see sort of companies operating differently? It's kind of like what we do.
Yeah. I think credit's still going to be tough in this market. I mean, probably the two biggest issues for me running the finance side of this company is liquidity and credit. And I cannot tell you, during this past 3 months, I've had conference calls with every one of our warehouse banks that give us the credit to fund all these loans. So it's, every one of them were concerned, because they saw it just like we saw it. So you said we're funding all these loans, then you got locks coming in at a record pace. We talked about last time, Quicken, we're taking in so many lenders were locking loans on Optimal Blue. It completely shut it down. So the locks were still coming in fast and furious. We have to hedge it. Everybody wants to, get their loans in. They saw credit tightening. One thing we didn't do during this whole 3 months, we'd never changed who we were. So what I saw, as other lenders were tightening, we stayed true to who we were, and we brought in all this additional business. So we had to, again, the good news is business was good. We brought it all in, but we have to hedge it, which means we had to increase our hedge capacity at a time where nobody really wanted to give it to you. You have to have the ability, when the Fed stepped in March, late March, early April, and supported the whole mortgage-backed security market through purchases, which was a good thing, but the unintended consequence of it was you drove pricing through the roof, which again, they supported it, but the unintended consequences was, as we were hedging all this business coming in, you had to answer margin calls to the tune I've never seen before in my career, millions and millions of dollars. And it put a lot of stress on other lenders. That's why it was so important, way back when, 4 years ago, to create as many liquidity sources as you can to plan for something like this. I always thought it was a nuclear bomb that was going to go off somewhere overseas, and we had all this money coming into our financial markets, driving rates a lot lower and prices a lot higher. Well, we got that nuclear bomb. It was called COVID-19. So we're not out of it. Credit's still going to be tight. I'm glad we got all of our liquidity sources. The good news for us is we didn't lose anything. We did not lose any warehouse. In fact, we've increased our warehouse lines over $15 million just to handle all the business. No issues, and we have no liquidity sources that were shut down.